What's going on, everybody? I'm going to do a dots recap for Friday, June 27th. June 27th. So this was the only setup I took. I'm making this video to show an example of how the dots can be used, one specific entry function, one specific model. If you're looking for a way to use the dots, this is a model that you should backtest and see for yourself. Don't take my word for it. Don't copy what I necessarily do without doing the testing. Don't trade the dots without doing proper testing. The dots are just meant to be used as a confluence in your trading, just something to stack with other market observations, other market methods. And at the end of the day, if the dots work for you, use them. If they don't use them. It literally doesn't matter to me. I created them because I trade profitably with them. Sith, the guy in the room, I showed him the indicator before I made it public. He made over $300,000 off of Apex in 2 months, I think. His stats are in the Discord somewhere or on Twitter. So again, use the dots, don't use the dots. It literally doesn't matter to me. I just made them available to the public because they help me. They help Sith. They help a bunch of people in the room. If you don't find them useful, like don't use them. It's totally fine with me. I totally understand it. But that said, this is a setup that I took on Friday, right before I had to go golfing, and yeah, backtest it. This is a trade I took. I'm not sure what else to say. So the market opens right here where my mouse cursor is. You can see no real direction. We get a sweep lower. This box over here is London. So London lows get swept. We get wicks. We get a divergence here. Some IFVG people, I'm sure, found a reversal in here. I waited for the dots to get all green. So at 9:45, we get our first column of all green dots. We have obvious liquidity we left from the previous hour. Take the dots direction, which is green. So along on the first closure of the 1 minute candle that lines up with all green dots, the ATR was around 17 points, around 20 points, call it, whatever. And I like to target liquidity. This high, ultimately this high, that is what I like to do. Does this work all the time? No, it does not. Does it work most of the time? It's for you to decide yourself with your testing. So this trade plays out. So the dots turn green. Right here we have EMAs holding. We come into a 950 macro where you expect volatility. You have obvious highs to target. It's not rocket science. So that is the one setup that I took. I had to go golfing at 10 a.m. so I left. You can see some people had some issue with the market moving higher and the dots being mixed. The dots weren't mixed here. This is where I got in and that's where I got out. These top two rows of dots are based on market correlations, and the market correlations that I've observed and made they can sometimes become uncorrelated. So I have a rule or a saying in the room: when the dots are mixed, do nothing. The dots weren't mixed here, so I was in here, got in, got out. So if you missed some of this move, I don't, because you were looking at the dots, I'm not sure what to tell you. Sometimes the market correlations, especially on a Friday, get out of whack. But one thing I wanted to add to this little brief video is something on the right hand of my screen, the NQ stats, specifically the initial balance break. So basically what it is you take the 9:30 open, the first high of the hour. So 9:30 to 10:30. And this isn't necessarily dots related, but I do like to look for dot setups using this break. So basically what it says is 96% of the time historically, either the high or low of this initial bounce will break. Okay, that's pretty cool. So if the market, if price closes in the upper half, the upper 50%, 83% of the time historically over the last 10 years, the high will get broken before 12 p.m. So if you're after 10:30 and you have a statistic that says 83% of the time the market will hit this high, it probably makes sense to not look for shorts and to look for your entry functions to potentially capture some of this move. So trading isn't an exact science. So this high should get taken. Not should isn't the right word, but there's a high probability that this high will get taken. You don't necessarily use this as a target. You use it for a direction. So directionally, the market should move this way. So again, this isn't a dots setup. In theory, I would like to see dots turn green in the direction of this high to line up with this 83% probability. But just something very simple, a 50% retracement is this green line. And then there was, it's hard to see, so this left column, so this is NQ, this is ES. You could see that there was an SMT, so ES made a higher low here, NQ made a lower low here around 11. So you can use that with the 50% retracement to frame some kind of, and then this blue line VWAP, just confluences. So the ATR at the time was about 17 points, call it 20 points. So I'm not, this is hindsight, so I know it goes higher, but I'm not saying you get in right at this low, but you frame some kind, maybe, an IFVG, you frame some kind of entry function to trade towards this high. This high ultimately doesn't get taken, but this high does. That's 14, that's 10 points away from this high. So again, this isn't necessarily dots related, but I like to stack confluences, and what I mean by confluences are using stuff like NQ stats to help with that. So this was a dot setup, that long, and then I'm just gonna get out of replay mode and just show you what happened. So again, that saying, when the dots are mixed, do nothing. If you can't stay out, if you use the dots, if you can't see that the dots are mixed right here and just not trade, then that's a discipline issue that I'm happy to try to help in the room any way I can. But you can see right here, 219, the dots turn red. Again, just using a one dot entry function, an entry here, called the ATR being 20 points, 20 point risk, 20 point target, hits, dots are red, one dot entry function. So there are 3 winning one dot entry function setups that worked on Friday. So backtest the entry function I talked about, the one dot entry function with a macro and obvious liquidity. If you're looking for a specific model, that's a model that I've tested, I trade with, I have stats on. So it's up to you. The dots, again, are just to be used as a tool. Ideally, you pair them with some kind of entry model that works for you or how you see the market best. If the dots help, use them, awesome. If they don't help, don't use them. It's totally fine. If not, there's a 7-day free trial for the dots. The link is in my Twitter bio, YouTube bio. We're happy to help. If you have any questions, just reach out. Thanks a lot.